YouTube, what's going on? Welcome back to another video. My name's Gabe Bowling, and in today's video, we're going to jump into what is a multifamily syndication, what does it mean, how does it work for you, how does it work for me, and we're going to jump into all of the details that most of the time people will never tell you. And so my goal with this video is by the end of it, you should have a very clear understanding of what is the best pathway for you to go down by utilizing a multifamily syndication or just syndications in general. And there's really two things about the business that you really need to wrap your head around before making any decisions of which pathway you want to go down first. And if you guys find any value throughout the rest of this video, all I ask that you guys drop a like, a comment, more importantly, subscribe. It helps the channel grow. And we all know that this information needs to be out and seen by millions of people. So with that being said, let's go ahead and let's jump right into it. I'm going to go over the traditional way of what most people will do when investing in real estate, which is you have a job or you have a business, you're making money, you save the money, and then you buy the investment property 100% with your own money, and you do that one at a time. Maybe you do one deal or two deals a year, and you pick them up as you go. Now, there's nothing at all wrong with this model. It works very well over a long period of time, and it works very well with people who are not looking for a change in their life. So I don't want to bash on that by any means at all, but I want to give you the baseline. So somebody works, they save money. Once they have enough in their bank account to then go buy a deal, then that's what they do. And so you're buying on a budget, you're buying based on what types of returns that you want and so forth. So that is traditional model. What is the difference between that and a syndication? All a syndication is it actually stems from the private equity industry. So it stems from private equity. You have funds and then you have syndications, but it's all registered under the SEC. Most people think syndications are a new thing. It's not. It's been around since inception of money. It's just existed in the private equity space with your typical everyday Ivy League person. And so what a syndication is it's a vehicle that allows you to raise outside capital and pool capital from outside investors. That way you can have one, instead of having only the money that's in your bank account, you've established an entity that then you can go out to the marketplace and you can raise money from investors who want to invest directly in the real estate but have nothing to do with the actual work. So you're allowing people to invest directly into real estate with making it a passive investment for them. That is essentially what a syndication is. It's a vehicle that allows you to raise capital from investors. Instead of you working, you saving money, and then you buying it and keeping 100% of the profits to yourself, using a syndication, you'll identify a property that's a great deal. Then you'll raise money from other people. Most of the time, I will never not invest my own money in my deals. But for a lot of people getting started, they might not have much to put into it. But the idea is that you are leveraging other people's money that want to be a passive investor directly in real estate without having to do any of the work. And in return for you doing that, then you can take a profit split or you can charge fees to the syndication. So there's multiple ways to get paid. There's a lot of money in both ways, whether or not you're doing it the traditional way or you're using the syndication route. There is no right or wrong way of doing it. There might be more efficient ways. There might be ways to go much bigger, but at the end of the day, it's what works for you. And so now that you understand the basics between the traditional route and what a syndication is and what it allows you to do, there's really one large question that you have to answer before going any further down into the syndication space, which is, are you going to be a passive investor or are you going to be an active investor and learning the business to become a syndicator? That is by far the largest question that most people will skip, and they'll just go down the pathway that they think is for them. So what are the biggest differences between the passive versus the active? I'm just going to go over some of the characteristics because if you don't know, I've raised over $100 million. I worked for Grant Cardone and Cardone Capital for 3 years. I raised $100 million from retail investors, one at a time, 50 grand, 100 grand, 250, 500, and $1 million at a time. Raised over $100 million from passive investors. And then I've also been on the back end of the business being the active syndicator. After I left and quit there a year ago, I bought an $8.2 million 55-unit apartment complex over in Daytona Beach. The address is 913 Catherine Ave, Daytona Beach, Florida, for anybody that doesn't believe it. I personally raised about $1 million for that property. Now, myself and my wife, we invested 50 grand into it. So we also invest our own cash into the deal. And then we also get some of the fees and some of the profit splits being the active syndicator in that project. And so typically who I see that best fits a passive investor role is the business owner or the individual that's a high income earning W-2 employee, or the salesperson that's making a couple hundred grand, the insurance person that's making a couple hundred grand, the people that have already found their main thing, whatever that is, whether it's owning a business, you're an entrepreneur. Entrepreneurs, actually, believe it or not, invest a ton passively because they don't have the time to actually go out and learn this business. So if you're busy throughout the day, you're earning money, you're focused on your main thing, and it's working, then I would recommend going down the passive route and seeing the benefits. As long as you can find great operators and learn what a great deal is to invest in great deals, it is really hard to find these consistent types of returns with this little amount of risk involved to achieve these types of returns. Just so you know, industry standard is close to 15% plus net to the investors between the cash flow and the appreciation. So 15% annualized returns very consistently, sometimes going 20, sometimes going 25, even 30 sometimes. I don't want to get you guys too excited. 15 is a very, very solid foundational baseline of what you can expect as a return as a passive investor. And so you look at it, you start comparing, like, okay, pull out your phone, look at your stock market account, it's down 15. Pull out your crypto account, it's down 500. And then pull open your syndication or your multifamily investment, and you're getting 6 or 7% for cash flow, and the value of the asset is up 20 or 30%. So night and day difference between multifamily and other investment vehicles. Multifamily or commercial real estate, specifically multifamily, will, in my personal opinion, I know there's going to be people that argue this, will outperform most asset classes that you guys can invest in. And so investing passively is typically for the person that is too busy, makes a bunch of money, and doesn't have time to then drop this main business over here that's already working to then go in and learn a brand new business, learn the lingo, put in hundreds of reps to land on one deal. It's just a lot, right? You'd rather just invest passively into somebody else's deal and be able to take 80% of the profits and not have to do a single thing other than fill out documents, send a wire, and set up your bank account so we can send you ACHs. So that sounds very attractive, very easy decision for that person that's already there. Now, the opposite, the person that is active, the person that is learning the business, is somebody that is in their current job and they want to make a change. Now, I run a 12-month-long coaching program for people specifically that want to jump into the business and learn it actively to the extent of being able to identify great deals with great returns and being able to raise money from the passive investors here. These people are typically people that are already in the business, single-family home investors, single-family home flippers, single-family home wholesalers, people that are already in real estate to some capacity, realtors as well, lenders, title, insurance, just people that are in the business that use real estate as their business, as their main vehicle that allows them to produce income. Those are the people that will scale into the active role of multifamily investing. If you're in a job and you just find yourself stuck or lost and you don't really, you don't see yourself in that position for the rest of your life and you're looking for a change, maybe this could be it, right? We don't know until you get in and actually test it. That's why I say most people who jump into the syndication route and learning it from the active role have already done and experienced something in real estate, whether it's buying a single family home and there's some pain attached to it because somebody leaves the next month. You get it rented, you do all this work, you rent it, and then 3 months later they break their lease and then you're on the hook for the mortgage, right? There's some sort of pain attached to that where it's a very clear pathway of like, okay, I need to go bigger, I need to reduce my risk, and I need to make more money, to be honest. That is where the active role comes in because you're learning a new skill set. Being a passive investor, your skill set is that you've already found another vehicle that makes you a bunch of money. And now your problem is that you have too much money and you need to allocate it into investments that can provide yield, right? And so for the person that's not there yet, or maybe they want to use multifamily as their vehicle to create the income and to create the liquidity and net worth, you have to pick up the skill set before you even make any money, which is why it doesn't happen quickly. Anybody who jumps into my coaching program, we manage the expectations so well on the front end, we actually lose a ton of leads because people want to get rich extremely quick. That doesn't happen in this business. And so if you're getting in, you have to understand the difference between being passive and active. And if you're going to go down the active route, you need to understand that your sole focus for the first 12 months is to develop the skill set that allows you to be able to identify a property that you can buy for X and do something to it and increase the value and sell it for Y, providing X number of returns to the passive investor. So there's a lot that goes into it. There's a ton of money that you can make in both businesses, whether you're active or passive. If you're active, you can make a ton of money by picking up the skill set, being able to provide great returns for the passive investors. Like, that is one of the max value skill sets that you can develop in general. Being a steward of other people's money, especially the wealthier people's money, if you can solve somebody's problem and make them money, if you can give me $1 million and I can turn it into 2 and I give you back 1.8, that person's going to have no problem at all with me taking 200 for making it completely passive investment. And so there's so much opportunity between the two. I think by now you start to understand the best fit for the passive investor and the best fit for the active investor. Now, what are the next steps regardless of whether you're passive or active? They're both the same steps. It's just how you perceive it, how you use it. So it's people and education. Regardless, whether you're a passive investor, you need to get educated on multifamily itself. What makes a great deal a great deal? And then secondly, the people aspect of it, you need to find more people like me. You need to find people that you trust. That's the biggest thing, that you trust to invest your own capital into great assets. That's why it matters so much for you to get educated, to know what a good deal is, and that you can trust the operator behind executing on that good deal. That's what creates the best passive investors. The people that don't understand the business and the people that don't trust the operators that they're investing with, you shouldn't be investing in this business at all if you aren't willing to go out and get some education on multifamily itself. Getting educated to the extent to allow you to become a better passive investor. What are some of the best deals to go into? What are some of the deals to avoid? And so forth. You need to find operators that are doing this consistently, have a proven track record, have good morals, have good core values, and ultimately you mesh with and that you want to invest with. And you trust them to the extent to execute the business plan. Now, on the active role, it's the exact same two things, education and people. Education is very, very, very large, much larger learning curve in the education space on the active role than there is on the passive role. Because the passive, you just rely on me to actually do it. On the active, you are the person that does it. Going through, getting properly educated, I have a completely free 2-hour-long course on multifamily investing. Completely free, no obligations at all, no credit card at all. All of the links for everything I do is going to be in the description. Check it out if you haven't. So I'd start there, completely free, understand, go through it, test me out, see if I really know what I'm doing. That's why I put so much value inside of the free course so you can see it, and then go through it. If you want to do business with me specifically, reach out to me about the Deal Room. It's my 12-month long coaching program. I do test trials as well. I actually allow you to come and see firsthand what we do on every single Tuesday and Wednesdays at 7:30 Eastern are the live training calls for every week of the year. So it's over 100 hours of live training. Those are the two educational programs that I'm running right now currently for anybody that wants to go active. Education, extremely important that you understand how to identify it, how to underwrite it properly, not just fluffy back of the napkin underwriting, but to give you the certainty of being able to move with absolute confidence, saying this 100% is a home run deal. That is what you need to develop for the education side. And then the people aspect of it is simply you are trying to find and develop relationships with the passive investors so that you can actually buy deals. And so developing relationships with brokers, developing relationships with investors, developing relationships with lenders, developing relationships with potential partners like myself. If you find a deal and you need some help getting it over the finish line, I can help you with that. That really is the next step. Regardless whether or not you're going to be an active or a passive investor, you have to make the decision that best fits your specific goal. To give you an example, if you're in a W-2 job where you're making 200 grand a year and you can save 100 grand a year, you can invest 100 every year, that's a pretty good gig, because over a long period of time, investing passively, still without having to do anything, over a long period of time, the income that comes in from those investments, completely passive, will supersede your active income that you are earning. You're trading your time for money. Over a long period of time, the investment income will out-earn your active income. And that is the definition of true financial freedom. Really coming up with that business plan of what works for you based on your current financial situation is really the next step. It all starts with a decision to actually get involved and actually learn and actually do. And then once you've made the decision, then the next step is, am I going to go active? Am I going to go passive? Maybe I start passive and then go active. There's a bunch of different ways to go about it. And so that's going to be it for today's video, guys. Again, if you found any value throughout the entire video, my goal is to bring the best multifamily content to YouTube and give everything away for free, because I know that it's extremely hard to buy deals in general, and education alone does not necessarily do it. You need people, you need guidance. For that reason, I'm bringing the best multifamily content on YouTube that exists, and I need your help to get the message out there. So again, if you could like, comment, subscribe. Also, let me know what types of videos you want down below in the comment section, and we will be bringing them out. So with that being said, peace, love, cash flow. I'll see you guys next time.